Welcome to CoreLogic's housing market update for August 2019. Dwelling values may have found a floor in July, with our national index holding firm over the month, following a consistent trend towards smaller month-on-month declines through the first half of the year. The stabilisation in housing values is becoming more broadly based, with 5 of the 8 capital cities recording a subtle rise in values over the month, while the regional areas of South Australia, Tasmania and the Northern Territory also recorded a lift in housing values in July. A number of factors are supporting a turnaround in housing market conditions. However, lower mortgage rates, improved access to credit and a boost in housing market confidence post the federal election are likely to be the primary drivers. Other factors include improvements in housing affordability, a reduction in advertised supply levels and recent tax cuts for low-income earners. Mortgage rates are currently at levels not seen since the 1950s, which is motivating buyers back into the marketplace after annual housing sales fell by almost 30% from their 2016 peak. With housing values down a bit more than 8% nationally and substantially larger falls across the most expensive markets, housing has become much more affordable and access to credit has become a little bit easier, with lenders using lower interest rates to calculate whether a borrower is able to service their mortgage. The improved housing market conditions have lifted the annual rate of decline to negative 6.4% nationally, with annual falls easing from a recent low of negative 8.4% to negative 7.3% across the combined capitals, while values are 3% lower over the year across the combined regional areas of Australia. From a geographical perspective, the primary drivers of the turnaround in housing market performance are Australia's 2 largest capital cities, Sydney and Melbourne, where values have ticked higher over the past 2 months, taking values 0.3% off their floor in Sydney and 0.4% higher in Melbourne. The 0.2% lift in Brisbane values was the first month-on-month rise since November last year. Values were also higher in Darwin and Canberra over the month. While values look to be stabilising or edging higher in some cities, transactional activity is also reflecting a levelling out in buyer demand. The 6-month trend in settled sales has turned a corner, bottoming out at a similar level to the previous 2 downturns. Melbourne dwelling values have shown a slight rise over the past 2 months, up 0.2% in June and 0.3% higher in July. The subtle rise in values comes after an 11.1% decline between the market peak and what seems to be a trough in May earlier this year. Unit values have shown some resilience during the downturn, with values falling only 4.6%, while house values are 14.1% below their peak. Similarly, the rise in dwelling values across Melbourne has been higher for unit values, which are up 1.1% over the past 3 months, and for houses, which remain 0.3% lower over the same period. Similar to Sydney, the strength of the unit sector may come as a surprise considering the elevated supply levels. However, the large majority of stock was sold when prices were generally higher. We could see some downward pressure of high-rise unit values as newly built stock enters the resale market. Overall, the July Home Value Index results provide further confirmation that the housing market has reacted positively to the recent stimulus of lower mortgage rates and improved credit availability. However, the response to date has been relatively mild. While the CoreLogic indices are a timely reference for housing values, other housing and credit indicators are also showing a positive trend. Auction clearance rates have been holding above 70% through most of July across Sydney and Melbourne, indicating a better fit between buyer and selling pricing expectations. At the same time, advertised stock levels have been reducing. Across the combined capital cities, the number of freshly advertised properties is down 25% relative to the same time last year, and total advertised stock levels are now tracking 5% lower relative to a year ago. The reduction in available stock creates less competition amongst sellers and increased competition amongst buyers, adding support to higher prices. Importantly, the trends in housing credit have also been pointing towards stability. Although housing finance data from the Australian Bureau of Statistics is only current to May, the trend leading up to June was clearly pointing towards an easing in the credit downturn. Recent CoreLogic valuations platform data shows a modest rise in the daily number of mortgage-related valuation events, signalling a lift in housing finance commitments over the most recent 2 months. Although the trend towards a recovery in housing values is relatively fresh, and centred within the two largest cities, we aren't seeing any signs that there will be a V-shaped recovery. Despite an improvement in credit availability, housing credit policies remain much tougher than they were prior to the Royal Commission, as lenders continue to move away from the household expenditure measure and examine borrower spending behaviours and expenses much more closely. Also, lenders now have the benefit of comprehensive credit reporting, whereby borrower debt profiles are much more transparent, providing lenders with the ability to assess creditworthiness in much more detail. The ongoing tightness in housing credit is expected to keep a rapid rebound in housing values at bay, despite the lowest mortgage rates since the 1950s. No doubt, policymakers will be keeping a close eye for signs of investor exuberance or a more rapid acceleration in the recovery trend. If values were to start appreciating more rapidly, there could be a renewed round of policy responses aimed at keeping a lid on housing prices, whilst at the same time allowing low interest rates to stimulate the economy more broadly. With so much change taking place across the housing market, it seems there's even more attention than normal on the trends. Make sure you're staying up to date with all the facts and figures at www.corelogic.com.au.